guys, and welcome to my latest market report in Las Vegas, Nevada and beyond. I'm sorry I sound so chipper because the title is definitely accurate. This is not a love song. I pulled the recent numbers of what's going on in Las Vegas, so I had the grasp on it, and right now there's single family condos, townhouses. We're at about 12,250 estimated homes on the market. If you add everything together, including high-rise, multi-dwelling, and land, we're looking at 15,140 estimated, around there. That's a lot compared to last year. So this economic retrograde is obviously happening very hard, fast, and quick. I call it a retrograde because some people don't like to use the other R word. So we're going to call it that. I got some terrible news. The new home sales numbers just came out, and year over year, new home sales are down 61%. That is a lot. They went from in July of 2021 to selling 1,038 homes to this July selling 434 homes. And I don't expect that number to get any better anytime soon. I'm already getting emails about price drops and lot premium reductions. So besides resale homes taking reduction after reduction, it's happening in new homes as well. It's officially hitting the fan. So when the Fed came out and said that they were going to raise rates 5 times this year, 5, 6, whatever it was, we knew that we were expecting prices to come down and things to level off. Crash level, we weren't anticipating or hoping for, but when I see 61% in new home sales down, you kind of have to be open to the idea that we could be in for a much bigger fall than we expected or anticipated. And I'd like to point out that the great Michael Burry said, this is the greatest speculative bubble of all time in all things. And he's absolutely right. This isn't just real estate. This is the stock market. This is the debt. This is mostly the debt market. So when you want to really look at what's going on, when you saw an inverted yield curve, that's a signal that we are in an economic retrograde. And I'm going to show you here over time what it has looked like when we've had an inverted yield curve.
What you're looking at here is the 10-year Treasury bond spreads. You could see the recessions every time there's a yield curve. A lot of these yield curves also coincide with wars. The Panic of 1910 was the fallout of the Sherman Trust Act. There was the Balkan War in 1912, which hurt the world economy and set the stage for World War I. And the post-World War I recession, there was an influenza pandemic, as well as unemployment. Skip a little bit ahead to the Great Depression, which was the stock market crash of 1929. And we didn't fully recover from that until after World War II. Now in 1937, we saw unemployment rise to 20%. A lot of these had to do with post-World War II and post-Korean War, along with interest rate hikes. 1958 was the Asian flu pandemic, and 1960 the Fed trying to control inflation, and the same with 1969, but also introducing the Vietnam War. 1973 was the oil crisis that had inflation rise to 8.8%. In the recession of 1980, the Fed raised rates in order to fight stagflation. So the early 90s, of course, we had the Gulf War, and unemployment was at 7.8. Early 2000s, we had the dot-com crash, we had post 9/11 and the Y2K scare. And we certainly can't forget 2007, 2008, housing market crash. And we, of course, saw an inverted yield curve at the beginning of the 2020 pandemic. So as highlighted by Bloomberg, we have had currently one of the most inverted yield curves in decades, which is not a surprise post-pandemic and also with the Ukraine war, the strain on the energy sector, and raising rates after them being at near zero.
So what we're hoping doesn't happen is that there's a huge sell-off in the yields market and the bonds market. Once we see something like that, that's when we're going to really see the stock market, crypto market, all of them dive down, just like the real estate's diving down as we speak. The difference between 2008 and right now, because I know everybody likes to make the comparisons, you couldn't get a loan in 2008. The banks were shut down. Now nobody wants a loan. Nobody can afford a loan. Prices are sky high on everything. People are smart enough to know that, you know, in the event things go south, they want to have cash. So people are saving their cash and they're not moving. They're not getting loans. They're not getting more debt. So that's why I think you're seeing this major drop across the board. There aren't buyers out there looking to buy unless they have to buy. So right now we have to navigate those situations. Now, are there going to be deals to be had soon? Absolutely. You're going to see deals. You're going to see deals all over the place. Unfortunately, a lot of those people who purchased homes during the frenzy, you know, might be feeling a little bit of regret. I mean, they got a low interest rate, but also you have to remember that those people put up a lot of cash to be able to win those houses. People were paying over appraised value that they're never going to see that equity again. They were waiving inspection fees, or they were waiving inspections, They were waiving inspections and finding out that the refrigerators, the air conditioner's broken, the roof is leaking. And I mean, you're getting a low rate, yes, but what comes with it? How much cash did you come out of pocket for that? So, yeah, it's a catch-22. So there will be deals to be had coming in the future very soon, because this is happening fast. This is happening hard. So keep your eye out on that. Now, my other viewpoint on this is major problem in Las Vegas has been the rental market. Rents have been so high and are still high, and I'm starting to see the reductions in those as well. So what's going to happen now is all of these homes that are on the market that I just said to you, some of them, a lot of them, are not going to be able to sell. They're going to get impatient, and what they're going to end up doing is renting out their properties. So you're going to have a surplus of homes coming on the market for rent, and then a lot of those people who are paying way too much for a rental, their year leases are going to come up and they're like, hey, I could live there for $1,500 and not live here for $2,500. Okay, you know, money's tight. So I hope honestly, because people need to be able to afford to live in a home, rental prices will come down. I mean, I always talk smack about the crystal ball people who, you know, are making predictions and guessing and all that. And to a certain extent, we have to kind of do it a little bit just to kind of prepare yourselves for best and worst case scenario. And if I was a betting man or woman, I would say median home prices might dip down to the threes. We might see them in the 300,000 soon. So I know in this environment, it can seem a little daunting and economically, and I just wanted to shed a little light on some positive. I want to reiterate the positive things that are going on. I don't ever want to be that like clickbaity, gloom and doom always. No, it's not my vibe. So let's shed a little light on the good things. There's a lot of people who are priced out of the market for quite a while, and they're going to be able to get back in. There's a lot of people who can't afford to rent a home, and now they're going to be able to afford to rent a home, God willing. And things are going to come down. You know, things are going to get better. Eventually, the Fed's going to reduce the rates. If the Fed doesn't reduce the rates, the prices have to come down, and that's just how it works. So, prices are coming down, and there's going to be some deals to be had, and there's going to be people who can profit off of it. So, let's cheer those people on. And then another really cool thing that's happened is, we're having a hard time getting these listings sold right now. It's not easy. There's not a lot of buyers out there, very few. And a lot of homes are sitting on the market for quite a while. And I don't know about anywhere else in the United States, but the Las Vegas realtors have really come together as one, as a unified unit to get these homes sold. We've all been working together, sharing each other's content, anything anybody needs, it's like we're right there for each other, and it's been really, really beautiful. I'm really, really proud to be a Las Vegas realtor right now, because it hasn't been us against them, competitive, like the TV shows is nonsense. So, everybody's really come together, and everybody's really cool, and just really trying to help each other through this. And I think it's beautiful. So, applaud to the Las Vegas realtors. I'm proud to be one of you. So obviously we're in for a ride. We're in for a ride right now. Every month it changes. I think we're going down further, and we're just gonna have to keep an eye on things and help each other out along the way. That's what it's all about, helping each other out. People are always gonna need to buy a home or move. There's always gonna be people need to move. And it's so important to, as an agent, to be able to navigate different markets, whether it's a down market or an up market. You have to be able to know how to navigate it for your client. So that's what it's all about, because real estate isn't going anywhere. This isn't a speculative market. Like, it's not like crypto where it's like, people still need to use, this product still needs to be used. It's a commodity. So it's just really learning how to navigate it and really try to do right by your client according to what's going on in the market moves. So once again, I want to thank you guys for subscribing to my channel, and your support is like beyond amazing, and I'm so grateful for you. So my information is in the description, so hit me up. And yeah, let's just keep track of this crazy volatile market that we're in right now, and I will be back, you know that.